Okay, so here we're going to go through um Cherry Corporation's income statement to prepare a corporate income statement. And so, as we know, in a corporate income statement, we're going to segregate the income statement based on the different categories. We have continued operations, we have income taxes, we have discontinued operations, and other non-operating items before we get to the net income, unlike what we would have known previously. And so we're taking the information above and we're going to prepare it for Terry's corporation. What I'm always going to suggest, take a look at the information and pull out the things that need to be in the certain sections. So net sales, cost of goods sold, this is a part of, your regular operations. So I'm going to pull that out. Extraordinary gain, if you're not sure, once something has net of taxes at the end, that normally suggests that it is to be in the other section. So this loss from discontinued operations, net of income tax as well. Loss on disposal, net of income tax as well. These go in the same section for sure. And the 70,000 goes with that, sorry. We have selling expenses and administrative expenses. Those go in the yellow section. So those go with the items in yellow. And then they say we have income tax expense on continuing operations. Okay. And then prepare the company's income statement for the year ended December 31st. I'm not going to ignore, so let's take that out. And so we're going to assume that the company has 50,000 shares outstanding during the year. And then we're going to compute, prepare the income statement and compute the earnings per share. And so, of course, we should know when we're preparing an income statement, we start off with our heading, Terry Corporation, income statement, and then for the year ended December 31st, 2024. And so all of that is relevant. And apologies, I have to fix this. Okay, all of that is relevant. And so now we get to the process of actually completing our income statement. And so as you recall from an income statement, normally we would have if it's a basic income statement, we have revenue and expenses. But as we get into corporations, our income statements are going to be much more detailed. And so therefore, we normally start off with things like sales, net sales, minus cost of goods sold, if it's a company that sells goods, or we would just have our sales minus our operating and general or administrative expenses. And that gives us our income before taxes. Then we do our taxes, then we do our ordinary items. And so that means in this case, we're starting with revenue. There's no revenues, but there are sales, net sales to be exact. And net sales, we should know sales and revenue are interchangeable. So net sales is going to be there, 3,800,000 less cost of goods sold. Put that over there as well. And so I'm going to put that in brackets. My cost of goods sold is 2.1 million. And so after that, we should know that net sales minus cost of goods sold is our gross margin. Now, keep in mind, they do not have to include this information all the time. You work with what they give you. You should remember and you should know from previous accounts classes that gross margin is this particular formula. And of course, you get extra points for even remembering all of it. And so therefore, you want to make sure you remember everything that you've learned before. 3.8 million minus 2100,123 means that we have a gross profit of 1.7. So we have a gross margin of 1.7 million. And so from this point on, do we have any other information? Yes, they say we have selling and administrative expenses, which are normally our operating expenses. So I'm going to put operating expenses, and we normally put them in order, our expenses from greatest to least. So selling expenses is going first. I'm going to put this over here, the dollar sign. Oops. I'm gonna add my dollar sign up here as well that I did forget. So we have 100,000, then we have administrative expenses, which are 80,000. So I'm gonna put that 80,000 there. And in this instance, I'm gonna underline. Our underlines are very important. And so that means my total operating expenses, is going to be 180,000. Okay. Now we know that when we get our expenses, gross margin minus our operating expenses was our income from continued operations. And so we're going to put that in there as well too, right below. So income from continued operations. So when we take the 1.7 minus that 180,000, we're going to get 1.520. So I'm going to paste in there. That is my income from continued operations. Now, because we're doing a corporate income statement, this normally says before taxes. Prior, it only had this information. Let's say for sole proprietorship or for a partnership, it would have just income from continued operations. In this case, before taxes, because it's corporation, we're keeping track of taxes very closely. Income tax expense, they told us is 600,000. So that's on continued operations. That's a hint there. 600,000, that's an expense. So that's going to take away from, yes, it's going to take away from my income from continued operations before tax. And that's going to give me an income from continued operations in general. So I'm going to take this amount minus the 600,000, which gives me 920,000. And so 920,000 is considered to be my income from continued operations. So, like I said, in the past, we'd already gotten to net income already, but we have to keep going. And we have to finish our segregation. We have our non-operating items. And those are the things that we highlighted in green. We have extraordinary gain, loss on discontinued, loss on disposal. And so we're going to bring those down with all of the same wording. So I'm just going to copy it and just paste it letter-wise. So E, extraordinary gain. And I'm going to line it up there. So 25,000 is my extraordinary gain. I also have a loss on disposal of discontinued operations, net of taxes. Again, everything that has net of taxes is normally grouped in the same area. So loss from discontinued. Just gonna put this on a new line just so it lines up as best as possible and indent it there. So that's my 100,000 from my loss. And then I'm going to bring in the last loss that we had there, loss on disposal. And we had 70,000 with that. So let's do that. Let's press enter. There we go. And we're going to purchase over. And so now these are all my non-operating gains and losses. Again, because we have net of tax, when they tell you net of tax, automatically know it's not going to be in the top section before taxes. Everything net of tax normally comes after this income tax expense. So that means it's not included in the income tax expense category. It's below. So that is always a hint there as well. This is a heading, so I'm going to underline all my headings just to look a little nice and decent. And I usually do indent everything else. Okay. And so, oops, that Oh, that's ended pretty far. But I guess that's fine for now. So that is my extraordinary items. Big indent wasn't meant to be that big. And so what we do here in this case, when we have losses, we normally put them in brackets or we identify them as negative because we don't want to mistakenly add all the way down. We cannot add gains and losses together. A gain is usually a positive number. A loss is usually a negative number. And so I'm going to take 25,000 minus 100,000 minus 70,000, which gives me 145,000. Let's make sure, oops, I know something was wrong. We should have 70 and 80. So where did I get these numbers from, guys? I really don't know. So we have 7,000 to the one. This one here is 25,000. And this is why we got to pay attention. 60,000 is 100. And then we have 26 and 70. Okay, so I am right. Okay, just wanted to check. So that's check, that's correct. And so we have, therefore, a net 145,000. So 145,000 in negative is a net result when we add these up. And so from here, that's going to be the final step before we complete this. And so when we press enter, we can now actually calculate our net income. And I'm sure there's a net income because we had 920 before and we're only taking 145 out. So that means there is net income. So I'm going to take this plus 900,000 means that I have a net income of 755,000. And so that is going to be my net income in this case. As we should know, you double underline your net income always. And so in this case, for Tyler Company, type of Tyler Corporation, they have an overall net income of 755,000. This would be how you would set up your income statement. Again, I did forget something, little cosmetic things, dollar signs. Dollar sign is usually next to your net income as well. And so we normally have a dollar sign at the top of every column, the start of every column. This is the start of a column, this is the start of a column, and then this is the bottom, the final number. How it usually has a dollar sign. And so this is my corporate income statement. I don't have to put corporate income statement. I could just put income statement. And so this is how we would work it out. Sometimes they give you total operating expenses, then that's what you put. Maybe they give you the income from continuing operations and they give you these other things and tell you to finish it. You finish it based on what they give you. They can give you detail just as well as in a question, they can choose to give you summarized data. But based on the knowledge that you should have from previous accounting classes, you have the know-how to properly formulate that income statement. All right. And so this is your net income and your income statement for the Terry Corporation. Now, the next thing it says is compute the earnings per share. Earnings per share normally can be done for 3 different elements or just for the final number. And so when they do earnings per share, sometimes they do it on this balance, sometimes they do it on this balance, which is my non-operating items, that's what I call it. And then they always do it on net income. So if they only ask you to do your ending or your earnings per share on net income, then you pretty much just need to do this. But sometimes they do ask you to do all 3, and there are 3 main sections. And again, this is a main section, continuing operations. Non-operating or discontinued operations or extraordinary items, these are non-operating, and then net income is always calculated to earnings per share. To calculate earnings per share, what we simply do is look at the number of shares outstanding, and we take this and divide it by those particular numbers. So if we had preferred stock dividends, we would have to consider that, but they normally don't, we're not going to see that right now. My income from continued operations, if I want to do the earnings per share in detail, so earnings per share. If I wanted to do that in detail, I would calculate my earnings per share by taking the 920,000 divided by 50,000, means that my income from continued operations per share is $18.40 per share. And so that's going to be my answer, $18.40. Then I could put non-operating items, and I would simply do the same thing. My total non-operating items is a loss of 145. I just take that 145,000 divided by 50,000, and I'm going to get 2.9, which is the same thing as $2.90. We're writing these in dollars and cents. So $2.90. I'm just lining it up a little bit. And then finally, if I'm my final number, net income, and this is the main number because this is the number that they tend to care most about, your net income, 755, 1, 2, 3, divided by 50, 1, 2, 3, and I get $15.10. And so $15.10 represents my net income. I'm going to underline and double underline that because that's what we do. I'm going to underline this as well, just because it's what we did here. We have a number, this underline and double underline. So it should mimic what's happening here, just in a smaller format, dividing it by the number of shares outstanding. And normally when you calculate it back, it should actually come back as well to 18.4 minus 2.9 gives me, well, slightly off, but it should be close. And that was a negative number, so what I need to do is actually put it here as a negative number as well. So when I did that, it should have come back. It didn't, but it's not completely off. That's going to be a rounding issue, likely, and so therefore it's okay. So let me just double check one more time. 920, 1, 2, 3, divided by 50, 1, 2, 3, 1840, okay. Then I'm going to take 1,445, 1, 2, 3, divided by 50,000, 2.9, okay. So my 755, 1, 2, 3, divided by 50,000, 15.1. Well, then we're satisfied. It's okay. This would be the correct format for it. Again, they can ask you for just to give you the earnings per share on net income. And therefore, that just means you take this divided by the number of shares outstanding. So 50,000 shares outstanding, and that is going to be your earnings per share. And so that is a quick walkthrough on how to complete a income statement for a corporation with the appropriate headings and sections. Sometimes there can be a question that says, okay, income tax is 40%. So if it says income tax is 40%, what that simply means is that they're not going to tell you what the income tax expense is. They are going to give you the 40%, and you're to know that you're calculating 40% of this balance here to give you the income tax expense. And so that means if it's 40%, I would take 1,520,123 times 0.4, which is the decimal format of 40%, means that my income tax expense would instead be 608. And so I would put 608 here and subtract and then continue on as normal. And so sometimes they can't tell you what the income tax is, or they tell you the percentage, and you ought to know how to use the percentage. Up top here, that's how we use it. We multiply the percentage by whatever our income from continued operations before taxes is. And then when it comes to the extraordinary gains or losses, what we have to do is calculate that as well, because taxes has to be shown here as well. So in those instances, we don't know what the net of tax amount is. That's something we have to calculate. So an example may be, let's say this extraordinary gain was actually the whole entire gain without any taxes taken out of it, which is the gross amount, is 30,000. That means then we started off at 30,000. If we were to tax it times that same 40%, because if 40% was used here above, it's going to be used below as well. And so times 40% means that 12,000 of it is actually taxes. What that means then is I would put extraordinary gain of 12,000. And then I would actually have to figure out the number that I put here. If I know I had 30 and 12,000 is taxes, then the net of that is going to be the difference between the two. So 30,000 minus 12,000 means that I would put 18 here. And so that is simply how you would calculate the numbers that go in the tax section if the question simply gave you a percentage as opposed to a number for the taxes themselves, and you had to calculate it. So you would just simply multiply this again by the tax rate, and that's how much expense you would note as your income tax expense, subtract it to get this. And then whenever you had these extraordinary items, what happens is they would give you one number, and then you have to take that one number. In this case, we use 30,000. You take that one number multiplied by the tax rate. So that multiplied by the 40% tax rate means that the taxes on that $30,000 is $12,000. That's how much taxes they have to pay on this extraordinary gain. And so therefore we have to say net of taxes. So this is telling me the amount that is considered to be taxes on the amount, the 30,000 that we had initially. And then what we do is we subtract the two to get the amount. So at the end of it all, when I add the 18 plus the 12, I should come back to the 30. And so in these instances with the discontinued operations, extraordinary gains, if they give you a percentage for tax, they're going to give you one number. When you write those numbers in the section here, the two numbers added together should come back to the one number they gave you. The number in bracket should be that number times the tax rate. The number outside and included on the actual statement should be the difference between the number they gave you and the taxes. So this is the amount, the net amount after they took out the taxes. So I hope that helps, and I hope it does something for you as you are preparing for class, preparing for exams, etc. So have a great day.